If you find yourself struggling to get payouts past evals, or if you keep, unfortunately, losing your deposited money while trying to day trade, then watch this video. I can't promise you I'm going to just give you the magic answer and you're going to change your trading around today, but I might be able to guide you out of this plateau or stuck place you're in. And this is, again, coming from experience. It's things that I go through, it's things I've been through, and I still go through today, and it's how I survive another day. And lessons I also need to learn as well, but I want to share those with you. So, to start, if you're depositing your money and you're losing that money, stop doing that. Go get a prop firm. I don't recommend demo accounts from a live account, but a prop firm account, which essentially is a demo account, at least gets some skin in the game. You are putting some of your money at risk since you have to buy the eval, buy a small one and trade the smallest size, right? I would go with futures. I would not trade Forex if you're still struggling. Until you have a better understanding of not necessarily just the market, but of yourself. Because if anything, trading will teach you a lot about yourself. And if you're almost there, if you're getting to the point where you're having a lot of green days and then you blow a count, or if you're passing evals and then you're blowing the performance account or live account, maybe this video is actually for you. Don't quit day trading just yet. You just have to go back and simplify things. When you're in the trade and it's happening in real time, sometimes you forget to zoom out and look at the bigger picture. Sometimes you're looking at that one candle and you think that one candle is going to be the break, or you have fear of missing out. That candle is going to break out and I'm going to miss the trade altogether. And all these other people are going to make money and I'm not. I'm going to be sitting on the sidelines. If you don't have fear of missing out, but then something big happens, you think, no, I'm still emotionally stable. I'll find the next trade, but then you size up to match to it. You still have fear of missing out. Just always remember, keep it simple. Don't make trading harder than it is. It's actually hard enough already to just generally trade. You're losing a good portion of the time, 40, 50, 60% of the time, you're going to be wrong, and that's what you have to live with. It's not the market against you. It's usually just you against you. Now, if you're wrong 60% of the time, you might want to rethink your strategy. And if you're right 60% of the time, at least your strategy is right. And if you have a good length of green days, and then suddenly you have one big bad day, well, all those green days just get wiped out. And how do you solve that problem? That's where you want to quit. You want to say, this whole thing's rigged. I can never do it. I'll never be capable. So let's get past that part. First thing first, let's start with just the market itself and what you're doing. And then we'll get into rules and entries and exits. So we'll try to make this quick. I'll try to make this, I can, 10, 12 minutes tops. So here we are, futures NQ, just looking generally on the hour chart. And we can see we broke out of this long range that we had been in. And if you were trading this and you're a momentum trader, this could have been really difficult. At some point, you should have recognized the lows and the highs. But right, if you're momentum, if you're breakout, you're always looking for the other side of that. Just remember, when you are in a range in the larger time frame, you really do ideally want to wait for a retest of that breakout to make sure that in the larger time frame, you're not just going to stay in the range and constantly get stopped out, right? So you don't want to be selling here at these spots. You could have made that one maybe, but look at all the other times you would have sold and then you would have been stopped out. You don't want to buy here, except for that one, but look at all the other times that realistically you just would have been stopped out. You would have been stopped out 4 out of 5, 6 times. You would have made one, and it probably would not have made up for all of these losses. So try to find your general direction. If you're ranging, you'll know to be very careful at the bottom for selling and careful at the top for buying. If you're not a range trader, then really what you want to do is you want to be looking for reversals. Reversals down here with volume. At this point, you can't use the EMAs because you're always going to be inverted on the EMAs. If you're an EMA trader or use that as one of your guides like I do, I use the 50 and 14, they won't really work for you. You're always going to be under them thinking, oh no, it's got to go down lower because the EMAs tell me I'm short. Let's add on just a 50, for instance. The 50 down here says go short, go short, go short, go short, but then it keeps going up. Why? It's because you're in a range. You're at the bottom of the range. You do have to recognize that. Now, once you break out and retest that range, you can start feeling confident about being out of the EMA and shorting, right? We broke down well underneath all of these lows, including this one. We retested it, we consolidated, and then we could no longer go any higher. Under the EMA, you're good to go. Now, this is the hour. If you're a scalper momentum trader, you're probably trading up to 1 minute, 2 minute, or 5. But try to get the larger context in mind, right? What are we seeing? All right, we had equal highs, equal lows, but then a lower high, lower low, lower high, obviously lower low. At this point now, it's comfortable to say that you should be in shorts. So now we know general trend direction, which is going to be down, right? Okay, we have that in mind. That's not so hard. Let's jump down to the 15-minute and start looking down here. The 15-minute, we can start to see some supports. Right? Now we're going to add a little bit of context into our trades. We see that they tried, the bulls, to hold the support, and they failed. All right, where are we compared to that? Well, they have a support here, and now we have potentially what can be, in the short, near-term future, a new resistance. What we don't know is if the bulls will reclaim it. Remember that the market is just, it's unpredictable. There's patterns, of course, right? Patterns of supply and demand, of resistance and support. There's your flags, there's a lot of patterns within it that do repeat, but at the end of the day, no one really knows where the market's going, which is why we all lose. All we have to do is strengthen our argument to the point that if we do lose, we still feel satisfied with the trade. So here, even though on the large time frame, we really should be looking at shorts, you could potentially be looking at short-term longs, rally pullbacks, but you have to be very, very careful. We never know how far rally pullbacks can go. This could be the top, right? This might set the next lower high. It doesn't necessarily have to retest this. We just know that this is an area of interest. And at the area of interest, we'd be looking, as a momentum trader, for something significant to happen. We'd be looking for an immediate and quick rejection, right? And then on the lower time frames, our entry. Or we look for an immediate retake of this position and for bulls to back again, or to go back and hold the support. We would still have to be careful in the long run of things because we know that we're still looking at lower highs. We have not built a higher high yet. So I would still say be conservative. If you got chopped up this last week, I got chopped up this last week. I had a great run of green days, and then I overtraded, and I lost because I lost sight of the bigger picture. So what I'm telling you is what I'm telling myself. Be conservative. Step back. You know you can trade. You know that you know to not fully depend on the indicators. You know that you've had green days. You've passed evals. Maybe you've had one payout. Maybe you've never had a payout. But you know what you're doing. You're just getting stuck in the spot, and you're questioning yourself as to why. And should I quit? And is it really ever going to be worth it? Yes. And we'll see how. So again, on this 15-minute, we are currently in a little bit of a rally pullback, but we don't know how far this will go. So all we can do here is realistically start adding some other strengthening sides to our decision making, right? We know that we have a high. We know that we have a session low, right? We have an overnight low and currently an overnight high. Now, for simplistic sake, let's just make some of these green and some of these red, right? Obviously, green is going to say that's support and resistance. I was going to try to change the color, but I feel like that's just too much. We'll make them all the same color. All right. So we see our current resistance, we see our current support, and our Friday's resistance and support. So these would also be areas of interest. Now, if you want to know where people decided to play the most of Friday, which will have a lot of significance into today, we're going to add the value areas. All right, great. So now you can see almost, let's take off the extension. So on Friday, people felt that this area here, it was not only a high of day, it was a high of day, it was also the value area high. This is the area where people thought, well, that's a premium price. I don't really want to pay for anything at that point. this spot right here is the point of control. This is where the majority of all transactions took place, in the middle. And on top of that, this was a happy medium for both buyers and sellers. So you really don't want to trade there if you're a momentum trader. And on Friday, this is the spot where buyers felt that this was a very discounted price. And felt, hey, that's a spot where I'd buy at. However, it never held. It never supported. So when it got to the discount price, sellers just kept selling. Buyers never stepped up. Showed a lot of weakness in the market on Friday. So if we were going to say, what's our argument to go short today? We know that on the macro time frame, we are creating higher or lower highs and lower lows. We broke out of that range. And on Friday, we never really tested the value area high where people thought it was a premium. We really only tested the value area low where people thought, okay, this should be a discount, but that discount still wasn't good enough to get enough buyers to step in. It just kept selling off, and it sold off all the way down here until about, what, is that 8 o'clock or, right? Yeah, 8 o'clock, 8 o'clock on Sunday. And then it finally started to rally back. So what we want to know is if today, if we test the value area low of Friday, does it continue to hold like it did here at 641 this morning? Right? If it does not, area of interest could very well be the Friday low of day. And then beyond that, an unresolved overnight low down here. All right, so we're just developing our arguments, right? If we're going to go short, these are targets. These are targets to look at. If you want to be conservative, you wait for these targets to be touched and you wait for reaction to happen. So what we're going to do now is we saw that on the 15. Right? We see that we're rallying currently, but it's very early, only 7:30. We're going to wait for the open of the day before we do anything, obviously. But we're just going to keep our eye on this. What we're looking for today is we're looking for this rally to break. Right? At some point, we want to say, hey, if this is just a rally pullback and not a recovery, then we don't really want to see these areas be tested and find new support. What we want to see is we want to see that it's fine if these areas get tested, but we want to start to see, again, lower lows get put in. This would be a lower high if this turns around. And then if we come down here on the smaller time frames, we have a lower low. And down here in the macro time frames, we have a lower low. So we can continue targeting all the way down. So what we would do if we were going to sort of pretend that Friday were today, is to be patient. We're going to let the market open. If you've had a couple bad red days, I would size down. If you trade one full contract, trade, half a full contract. Go down to the MNQs or the MES or whichever one you trade. Look for base hits. Don't look for home runs. If you have 2 losing trades in a row, stop trading for the day. If you have one great green trade, that's your typical average or higher, stop for the day. Just base hits. Now, what would we look for? Right? Let's look at Friday. Friday, if you were not patient, just like I was, you got chopped up. You may have held for that 15, but here, for instance, you had 2 really good setups on Friday that would have been one and dones. If you were a solid trader that had your mind right, here are the setups that I saw that I didn't take, but I look back because you should always look back at the end of your day, especially on red days. See where you went wrong, see where you went right. I think I got chopped up a little bit in here, and then eventually I know I got chopped up here when I thought we would test the opening range high on the 15-minute. But let's look at the simplicity of Friday, even though it was choppy. Barcodes right across here. You break the 15-minute right here, and you're looking for momentum. You want this to go straight down at 518. You can probably take it at either 00 or at the 80 mark. At that point, there really wasn't much to the left to look at. So you're really kind of targeting psychological numbers, right? 8 00s, 80, 50, 20. Now, let's say you didn't take this trade, but if you did, where's your stop? Well, you can't go up here. You don't want to go up here. You're a momentum trader. You're not looking forward to retest this all the way back. You're not even looking for a retest halfway back. If you're momentum and you're not doing a retest, you want to be just above some initial line, which would be the 15-minute opening range breakout just above. So it's probably somewhere between 540 and 550. And here you're at 518. So 20, 25 points in. And remember, 1-to-1. So you definitely need at least 20 points down, which you would have easily gotten as this thing made its way all the way down to 454. Okay? So that's a huge trade. But let's just say base hit, or you didn't even take it. You don't take that trade. You see the bulls try to come back in. Right? You look at the volume here. It's pretty low volume for that. And they couldn't even overtake this candle. The bears try to push it, but on low volume. Bulls try to come back in. Now we're testing that 15-minute opening range breakout. We're at the bottom, right, where we want to say, is this going to hold or is this going to break? Right? So what do we got? We kind of break through. We close above. Now, oftentimes when you get back in range, you can break higher, but we're going to be conservative. We know we're in a downtrend. We're under the 50 EMA, right? Let's add the 14 as well. See what's going on there. We're respecting the 14 EMA right there. Now, that's a great indicator that if we fall back out of range, you're probably going to head hopefully lower. So let's say you take the bottom of that 515 to 560. That's pretty big, right? You want to definitely half size or even quarter size on that one if you need to, if you don't have a lot of room. If you've had some bad red days, you can't take a big loss. That is a big one if you trade full-size contract. And you want to initially target the lowest low. Now, hopefully it breaks. It just barely broke and popped back up. So you had one breakout trade, you had one retest and fail trade. Now here, at this point, you should start seeing that barcode setup. You should start seeing that new range, right? It's out of the 15-minute, but now we're just playing in this range right here. So you really don't want to trade again unless something happens to show that it can break out of this trade. This is where I messed up. This is where you can still take losses as long as you do it right. Now I got bullheaded. I broke out of this range. It couldn't go any lower. We had a higher low. We broke above the 50. I thought we were going to test the top of range. I wasn't really zoomed out, right? I was just looking at the 5-minute, and I sized in, and I sized in again 2 more times. And this thing turned against me, right? It barely got above this wick, and it failed. And I took a big red day for that. And it really sucks. I had to go the whole weekend on that. It would have been fine if I decided to take the breakout against the trend at half size, maybe full size, with a fair stop. Momentum means I shouldn't be waiting for the bottom of this candle. At most, 3/4 of the way down. At most, top of that, just below the top of that wick, in case it wants to test it, right? Maybe 560, right here, 597. That's still a lot. That's almost 40 points. Half size, you can narrow that down to about 20 points, which isn't too bad. That's still a decent loss. But had you won on these 2 trades, all right, you could have gotten it. Once it failed here, we should recognize that we're probably going back down. Now, at this point, I'm out for the day because I like momentum, and I always feel like after 11:30, momentum kind of dies. And then I'm working for the rest of the day, so I can't trade any of this. But if you were trading this, look what we have here. We failed to break any higher. We go back into the range. We respect the EMAs. You once again have a new breakout. This is the bottom of the range, so we're going to look all the way to the bottom. We finally break out of that range, and you're going to treat it just like you did in the morning. 435, we're going to go in at 426, right? 20 points up, put you just above that range because you're looking for momentum. And now again, we don't have a pure target on the way down yet, right? This became a value area low by end of day, but right now we're just looking. So if you're in at 425 and you got 20 points, you need at least 20 points. Well, the next spot is 25 points down at 00. All right, if it floods through that, you can hold down to 80. It did hit 80 before it bounced right back up to about 00 and head its way down. But you still had easily a 1-to-1, if not a 1 to about 1.5. So you would have taken, if you were like me, a loss here, a pretty decent loss, but you would have won, and you would have won. That's 3 wins, 1 loss, right? That's if you traded all day. But if you got chopped up, if you just couldn't read the market, because it's all hindsight now. It all looks really clear at this point. Oh, it's easy. It broke out and went down. Oh, it retested and failed. Well, what about this one right here? Yeah, if you tried this again, it's what I notice a lot of people skip on other videos, right? If you look at this break here, this is a perfect retest and fail. If you try to go in on the break, well, you never got it, all right? But now here again, retest, we fail. We go in on the break, and you're looking for lower lows, right? You're going at 501, right? You're really hoping to get down here and it goes back on you. Hopefully you stopped out short, but maybe you lost, right? Maybe you got back into the range, you took a loss. So you had a win, you had a win, you had no trade if you waited for the break. Then you go in again, maybe you stopped out on this one, now you have a loss, and maybe you took this one as well for a loss. So maybe worst case scenario on Friday, you should have been break even. Or if you were, and that's if we were 1-to-1. If you made a little bit more, you should have had just a little bit of profit and said, hey, you know what? It's a tough day. I've got 4 trades under my belt. I'm barely in the win. Let me walk away now as a momentum trader because I'm going in late morning. If that failed you on Friday, if you just got chopped up like I did and had a big red day and didn't want to accept the losses, because that's what happens. You go a bunch of green days, you don't want to see a loss. If you're hopeful when you're in the red and fearful in the green, you got to flip that. You got to go backwards. If you're a momentum trader, basically a scalper, and that move is going against you right away, you're probably in the wrong. And just be wrong. Just cut it. Get out. You know, if you size appropriately and you want your stop to get hit, only allow for 2 stops to get hit and then just stop for the day. Because worst case scenario, you're down 2, maybe you're down $300, $400, $500, but on a 150K account, that's not so bad. On a 50K account, hopefully you're trading micros and you're only losing $100 to $200, maybe 3, right? But just stop, because worst case scenario is you're going to go all day and you're going to compound those red days, especially on a Friday, and you're going to end up losing 25, 30, 40, 50% of your account because you're too bullheaded to allow for a loss. The market isn't difficult. It's you that allow yourself to fail in the market when you're unable to read it and refuse to admit it. That's the best way I can put it right now. Because if you trade smart, you trade patiently, and you have that 50,000 foot view all the way down to the micro view, all the way down to the 5 foot view on the ground, where you start entering your trades and looking for exits and looking for stops, you're still going to lose. You're still going to have red days. You're going to have red weeks even sometimes. But just limit yourself and know that you're probably going to lose about half the time. Hopefully a little less, right? It's just like shooting a basket. You know, if you take 20 shots, you're not going to make all 20 unless you're Steph Curry. And there is no Steph Curry in trading, right? Everyone here is about a 50 to 60% trader, and they're very successful. So remember that. The best traders will lose. You're not the best trader. You're going to lose. Allow the loss. And then at the end of the day, win or lose, journal that trade. Better yet, if you can, take a trade, stop, journal the trade just after, your emotions, your feelings, what you thought was going to happen, what did happen. And at the end of the day, review it again. After your emotions have calmed down, after your thoughts have been realized on the chart, whether right or wrong, and then go into the next day with that information. Right? Every day, small improvements. Every day, base hits. Every day, realize before you enter the trade what you're risking, and know that you have a 50%, a coin toss of losing that money you risk. So that money needs to be comfortable, right? Whether it's $50 or $500, every time you go in the trade, say, I'm comfortable losing this amount in order to target this amount. So if you can, find trades that easily have 1 to 2, 1 to 3 risk-reward ratios, but still just aim for that 1-to-1 minimum. And then allow that to grow. If you have runners, yes, let them grow, but get those base hits in after these big red days, right? You recover, you start building your confidence. And as you go, you can start letting these winners win, right? Don't be fearful of them being in the green. Don't be hopeful when they're in the red. Cut them in the red. Don't move your stop loss. If you're momentum and the momentum's against you, get out. Don't just flip the trade. Wait for your setups. Be patient. And especially on days like this, if you had a bad day on Friday, don't jump in the market at 9:31, right? Wait for 9:45. Wait for that range breakout. Be patient. Know the bigger picture. Wait for your setup. Reduce your size. Go for base hits. And I guarantee you're going to start to see recovery. All right, questions, comments, leave it below. I'll be happy to answer. Good luck to you. I'll see you tomorrow.